Alright folks, buckle up, this is a big one. In the most recent Berkshire Hathaway annual meeting, Warren Buffett dropped a bombshell. He revealed that they almost pulled the trigger on a $10 billion investment. Yeah, you heard that right, $10 billion, and this wasn't just any stock, it was a move that speaks volumes about how Buffett is thinking into his current market now. In just a moment I am going to roll the clip from CNBC where Buffett shares that insight directly, but after that I'll give you my personal reaction, what stood out to me ahead I think it means, and how it fits into the bigger picture of Berkshire's strategy. I'm going to break it all down for you. We're going to unpack what Warren really meant when he talked about holding over $300 billion in cash, why Berkshire Hathaway isn't in a hurry to spend it, and what that says about market conditions, risk, and long-term strategy. This isn't just an old man hoarding money, this is chess, not checkers. And stick around, because after we break down Buffett's comments, I'm going to dive into one undervalued fintech giant that Berkshire has recently bought into. Trust me, it's one you don't want to overlook. If you're only going to watch one video today, make sure it's this one and watch it all the way to the end. Smash that like button. Let's get this video to a 000 like. Share it with someone who needs to hear this. Drop your thoughts in the comments below, and of course subscribe to the channel so you never miss the next big financial insight. Alright, let's jump into it. Here's what Warren Buffett had to say. This next question comes from Advait Prasad in New York. He writes, "Today Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations is the decision to raise cash, primarily ad-risking strategy in response to high market valuations, or is it also a deliberate effort to position Berkshire's balance sheet for a smoother leadership transition, providing Greg AEL with maximum flexibility and a clean slate for future capital allocation decisions?" And I will add one line from another shareholder, Mike Conway, who asks, "Are you encouraged you may see some fat pitches coming your way?" Yeah, well, I wouldn't do anything nearly sonable as to withhold investing myself just so that Greg could look good later on. If he gets any edge, what I believe, I'll resent it. So now that the amount of cash we have, yes, we would spend, well, we came pretty close to spending $10 billion not that long ago, for example, but we'd spend $100 billion, I mean, and those decisions are not tough to make when something is offer that is that makes sense to us and that we understand and offers good value, and where we don't worry about losing. And the one problem with investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. You know that the long-term record is sensational, but that is not a product. And let's see, I've had 200 trading days times 80 years, and yeah, to 16 million trading days had been we kind of 16,000 trading days. Said it would be nice if every day you got 4 opportunities or something like that, and you could, and they were expected to be equally attractive. If I was running a numbers racket, every day would have the same expectancy. I would keep 40% of whatever the handle was, and so the only question would be is how much we transacted. But we're not running that kind of a business, and so we're running a business which is very, very, very opportunistic. And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50, and that we never concentrated enough. We would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that have developed where we would have like $50 billion or something like that. But that just isn't the way the business works, and we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper actually for people who are passive investors just to make a few simple investments and sit with their life, sit for their life and them. But we've made the decision to be in the business, so we think we can do a little better than that by behaving in a very irregular manner. But if you told me that I had to